Okay, then we're now going to learn about the first type of account, and this is what we call the profit and loss account. And basically, profit and loss is simply the revenue, the money the business makes selling its products, take away its costs. And if you do that, revenue take away cost, you're going to find out that either you've made a profit or you've actually lost money. This is a really important account to know. Now, in this little mini session, we'll learn what revenue is and how to calculate it. You'll understand what profit is and the difference between gross profit and net profit. And then ultimately, you'll be able to make a business profit and loss account and help analyze the account to see how well the business is doing and if the business can do even better than it currently is. Okay, revenue. Now, revenue is the money that you make when you sell your products. So here's an example. I've got Nathan. He writes apps and he sells this app for £2 per download. So how much revenue would Nathan make if he sells 10, 200 or 1,000 apps? Well, we wouldn't have to be a genius to realize that if he sells 10 apps and he sells each one for £2, then 10 times 2 is £20. If he manages to sell 200 apps, 200 downloads, 200 times £2 is 400. And if he manages to sell 1,000 apps, 1,000 times 2 is £2,000. So basically, we can see that you calculate revenue by multiplying the quantity, how many you sell, by how much you sell each one for. Now, this is what the profit and loss account looks like. And when I was your age, when I first saw this, I immediately thought, oh, this must be really complicated. But it isn't. It's basically a big subtraction. And in fact, in business accounts at GCSE, we won't ask you to do anything that's more complicated than add up, subtract, multiply, and divide. And you guys have been doing that since primary school. Okay, so let's have a look at how this works. So let's imagine we've got this business, and this business has made sales revenue of £150,000. So this business, let's make a scenario now. This business makes monitors for computers, shall we say. So it's made £150,000 from selling monitors for computers. Now, selling the monitor isn't free. You've got to make the monitor. So you've got to buy the plastic, the metal, all of the different wiring, and you've got to pay some workers to put all the pieces together. So to make £150,000 worth of sales, it's cost us £100,000 in supplies. So what I can now do is work out the gross profit. And as you can see here, it's sales 150 minus 100 leaves us with £50,000 gross profit. Now, these cost of sales, these production costs, the cost involved in making the monitors, it's a big number. But actually, there's lots of other costs as well that the business has to pay for just by being open. So even if the business makes no monitors at all, the landlord still expects to get paid his rent. The insurance company still expects to be paid for the insurance. The workers working in the office still expect to be paid, even if there's no monitors being made by the production staff. So whether the business makes lots of products or very few, there's day-to-day running costs that have to be paid. And all we do here is we just put them in a list and we add them up. And we call these costs expenses. So as you can see, we've got £23,850 worth of expenses, and that allows us now to work out our net profit. So £50,000 gross profit, take away £23,850 expenses, means that this business has a net profit of £26,150. And as you can see here, net profit is what you're left with after all of your costs, your cost of sales, which are your production costs, and all of your non-production costs are subtracted from your sales. So sales, take away cost of sales, take away expenses, gives you your net profit, what you're left with. Now, usually GCSE stops there, and that's as far as it will go. But in real life, there's one extra stage here. So we're going to teach you this just in case it gets brought up in your exam. So £26,000 is your profit. Now, whenever your business makes a profit, it has to pay tax on that profit. And in this example, it's £8,000. We can tell that this is a company because it has dividends that is paid to its shareholders. And this business has chosen to give its shareholders, the owners, £10,000 in dividend. So 26,150. Take off the government, the tax rather, give the government their bit. Take off the dividends, give the shareholders their bit. Means that what you get to keep, what you get to retain in the business for the future is 8,150. So if you look at this business has had to make a huge amount of sales. It's had to sell a lot of monitors just to make a very modest £8,150 worth of profit. Now, what the exam board are more likely to do is to give you a shortened version that looks a little bit like this and ask you to analyse how well the business is doing over probably a couple of years. Now, notice this is sales revenue minus cost of sales equals gross profit, expenses as well. But it's just a shortened mini version, if you like, and asking you to calculate the profit figures. How well is the business doing and what could we do to improve it? Well, let's work through one. So £10,000 sales, and it's cost them £4,500 to make those sales. Let's imagine this business makes ice creams. Okay, so £10,000 sales, and it's cost them £4,500 in cones and milk and sugar to make them. So 10 minus 4,500 gives us a gross profit of 5,500. The little business has to pay all of its non-production costs, its expenses, and what we're left with then at the end is £2,500. So 5,500 gross profit, take off the expenses. This business has a net profit of 2,500. Now, if we do the same in 2022, we can start comparing the 2 years. So straight away we can tell that the business is doing okay because in both years it's making a profit. But we can be a bit more positive again because we can clearly see that gross profit increases, net profit increases, and a big part of that is because its sales revenue's gone up. It's just selling a lot more now. But it's managed to control its costs. Its costs have gone up, but you'd expect them to a little bit when you're making so many more sales. Times are looking pretty good for this business. Can we improve things further? Well, okay. If I want to increase my net profit further, there's only two things I can do really. I can either get more money in, increase my sales, or I can try and reduce some of my costs. Maybe look for cheaper suppliers, maybe negotiate lower wages, or kind of haggle and negotiate with the landlord to reduce the rent I pay every month. You know, kind of look for energy saving devices so I can cut back down on the electricity. The truth is I can do a little bit of all of these things, can't I? And if I really want to increase my profit more, I've got to try and increase my sales revenue and decrease some of my costs. And that way, this business will go from strength to strength. Okay, now, ultimately, remember that you need profit for your business to be successful in the long run, to grow, to expand, and do the things you want to do. And whilst it might be possible to survive in the short run if you make a loss, in the long run, if you've got more money going out than coming in, then unfortunately your business won't be successful. And that's the profit and loss account in a nutshell. Well done.